Hey boys and girls, Siam here. So I've got a lot to cover today, so I'll try and go as fast as I can. I want to talk about how I lost $180,000 yesterday and why it doesn't matter. We need to understand the OPEX of trading and why you mustn't blindly follow loosely formed concepts and why we're all in crypto. So yeah, let's do this. Righty tighty. So, how I lost some money yesterday. If we have a look in, okay, let's not use, I don't want to lose my squiggles here, so let's do this. So first of all, let's just look at Wonderland on the daily chart and just draw some very basic lines. So first of all, we have this line. Come on, where is the line gone? Draw, there we go. So this resistance level here, which the market is struggling to get on top of, and we will not exit a bear market until we get past this level over here. But at the same time, we have what looks like a bit of a bearish rectangle. Falling compression, which is actually really bullish. So typically, what you tend to see is towards the apex, which is around here, break out and then start doing this. But the thing I want to explain is how I actually lost that money. So on the other chart, it's something like this. There we go. And you can see there's a bit of a channel. Now, so as you can see, 23 hours ago, I started off with 1249.75 memo. And in the series of a really bad bunch of trades, or one bad sidestep basically, where I think I was a little bit too trigger happy, I screwed up and then had to protect capital and then basically admit that the trade was wrong, then go back in. And so I lost basically 80.4 time. So as I stand here, 80.4 time times the price of 2250, it's basically 180k loss. But long story short, it's an 80.4 time loss. Now, before I explain why it really doesn't matter, I want to show you how how I came to lose that. So we've been doing some really good side steps. I mean, if you look at the history, the amount of time that we've been making from this wallet, me, have made from the side steps has been quite high. So the first thing, it doesn't matter, is that the 80 time I lost is just giving back some of the profits, and because in January alone we have made quite a fair nice uplift of time. I'm trying to find where it says unstake, but yeah, I mean, you can go through this, doesn't really matter. So what happened is, if we look here we go. So the market broke this mini support over here, and it was around this level I sold. So I saw that this level was breaking. I sold a whole bunch at sort of 320, and then the market fell. And if you look in the history, you'll see that I actually bought towards the bottom. So around sort of 2030-ish, I then rebought. So this was where the big chunk of token uplift I had. So that was a really nice sidestep. And then what happened is that overnight it was good, and the next day I was happy taking. I got a couple of rebases in, which was nice. I always like getting rebases. But there's some really bad news. So what happened is that the dollar index started shooting up. Now the dollar index is this one. So if you have a look over here, if you look at this one, the Dixie. Yep, fine. Ignore this for now. But what happened, this green bar started really shooting up. Now at the time, this was a big fat green bar, and it looked really, really bullish. So what that then did was it spooked Bitcoin, and therefore, because Bitcoin started falling, if we then go onto Bitcoin, 1 second, over here, and then where was it? So let's go to the 1 hour chart. I probably can't find the exact one, but I think it was something like, it was one of these little moves down. I think, yeah, here we go. It's that one there. So what happened is that Bitcoin really started falling. So and then remember this. You can see this is a wick. At one point, this was one big fat red bar, and it looked like it was closing below this level. And then if it closed below that range, it would have been game over. It would have been sort of a waterfall to 36k. And therefore, I was watching this, and I was like, oh shit, I need to get out. So as you can see, I drew a little arrow here. I sold. I sold here. Yeah, I think it was there I sold. And then the market obviously started falling eventually. And what happened is that we then had a sharp reversal. It started, the dollar index, everything just reversed. Dollar index, the Bitcoin, etc. And I thought, oh shit, I'm on the wrong side of the trade here. And what actually happened is I realized that this was a fake out, and then I bought here, so 2070. However, I got massively slipped. So even though my buy caused, not just me, it wasn't just me in this. I think my trade originally moved it only by $50-$60, but other people started buying. But I got massively slipped, and as you can see here, there was a bunch of failed trades when I tried to get back in. Let's just go, where is the history? Here we go. 2 failed trades as I was trying to buy back in, which meant the price was moving up and hence too fast for the order to fill, and then it just got failed. So I basically, looking at this, I got filled in over here. So basically I lost 80 time with everything, which isn't ideal. Now, going back to what I said, why it doesn't matter. See, the thing is, when you're doing sidesteps, all you're trying to do is protect capital, so protect your equity, and at the same time increase your token portfolio, as in how many tokens you have. Now, if we were to just look at a slightly bigger picture here, I have been sidestepping all the way down. Basically, every single time the market has attacked this level here, so if we just do this a little bit more accurately, something like that. Every time the market has attacked this resistance level, I've shorted it, and the market has gone down and bought in at lower levels, then got in and out again, etc., etc. So that's why I've grown. I don't know, something like made 800 tokens in a month or two, and so the reason it doesn't matter is because when you're in the middle of a bear market, if you can give and take, win and lose tokens, but it's what you're left with at the exit of the bear market that counts. Okay, so it's all very well and good having massive wins all the way down, but if you then absolutely screw the pooch on your very last sidestep, and then the market goes, and let's say you're stuck in MIM, and then the market goes wee, that's going to kick you in the teeth, isn't it? And that's happened to me before. I remember doing this with Ether in 2018. I increased my Ether holdings by about 400%, and then I screwed up the last sidestep. So it does happen. So you've got to be very cautious. And yeah, there are no dogs screwed in the filming of this video. But so it does take me a good half an hour of deep analysis before I do any sidesteps. I don't just do it on a whim. Now, are we going out of the bear market yet? I don't think we are. I still think we're midterm, sort of still very quite bearish, and the reason being is that, as I've said for a while now, on the daily chart, if we look at Bitcoin, we have got a huge head and shoulders looming over us. And all that's happened is that the market has is basically crashed through this level. We're having a teeny weeny pullback, and we could have a move back down here. This is a could arrow. It's not saying I'm expecting that to happen. I think that is a possibility. And so, yeah, we may have short-term bullishness at the moment with everything rising, but I think it's very, very short-term. This is still looming over us, and when we're looking at stocks, everything looks, in my opinion, slightly ropey. So, yeah, it all depends on what stocks does, and then obviously what Bitcoin does. If Bitcoin really does fall, game over for everything else again. So I'm very cautious. So short term, yeah, I think we can have a little move to the upside potentially. As I said to my students earlier, that what I would like to see, again, I'm not saying this will happen, what I would like to see is a natural pullback, which is going to be natural, back to sort of 2200, and then another move back up. If that then happens, it creates an inverted head and shoulders, and then we can sort of Kobo out of this up to sort of 2500. If that then happens, that's a nice little bottoming pattern for the bigger time frame, and that would then be a nice, slightly bigger head and shoulders on the bottom, because remember, head and shoulders are always fractal. Mini ones lead into bigger ones. So if that would then happen, we then, that would be us puncturing out of this sort of resistance level. But until then, really not interested. And also, I'm not sidestepping at the moment. One of the things that I look for when sidestepping is a sharp move into resistance, like here, sharp move in. We sold there as well, but here was another sharp move into it. What's actually happened over here is the market's just dribbled sideways basically into it. So it's not that strong. So I'm just going to sit tight. I like holding my stuff in memo, just getting the rebases. So yeah, so that's why it doesn't really matter. Now also, looking at losses, you have to understand that trading is no different than a business. So if let's try and find some spare space, here we go. So if you were to have a business, you have some basic metrics. So in any business, you have revenue. You then have your COGS, so your cost of goods sold, or otherwise known as your direct costs. And what you're left with is your GP, your gross profit. And then, so that's minus. And then after your GP, you have your OPEX, your operational expenditure. You're then left with your EBIT or your EBITDA, depending if you're other bits and bobs. So your earnings before interest, tax, depreciation, amortization, or what most people call profit. And then I could go further, talking about distributable cash flow and all that sort of stuff. But in a nutshell, these are the basic metrics of a business. So you could draw like a little, like a computer game energy bar, where basically you sort of invert. Well, yeah, you can do all this. So you basically, it's like, it depends. Basically, if you were to draw an energy bar, it would be something like all of your revenue will be looking something like this. Obviously, it depends on what your revenue is. You then have, little bit of costs, and then this lovely bit over here is your profit. So that's what it would look like, or you could do it upside down, I guess. Now trading is exactly the same. Ignore the energy bar bit, I probably confused you there. So trading, you have your revenue, which is basically all of your successful trades. So let's say your winners, your winning trades. The cost of goods sold will be your gas fees, or trading fees, or Trader Joe may have some 0.3% fees to go in and out of stuff, or whatever it may be. So let's just put gas fees. They are your direct costs. You're then left with your gross profit, which is it's still gross profit basically. But then after that, you have your OPEX, your operational expenditure. What is that? Well, it could be everything from your internet connection, so your internet and all that sort of stuff. But also, don't forget, you got your losers. And then when you net all of that out, you got your trading profits. So I treat trading like a business. So you cannot expect a business with zero OPEX. Every business on the planet has operational expenditure. Same with trading. This is basically your trading business. And when you have losers, it's all parts and parcel of it. You just need to make sure that your hit rate is completely irrelevant. No one gives a shit about, or you shouldn't give a shit about your hit rate. I care about this green bit being much bigger than this red bit. Whereas most traders, or most people that dabble on the markets are market dabblers, and their losses, so their OPEX looks like that, and their winners look like that, and then they're left with like nothing. So yeah, just keep it simple. So yeah, all I care about is having a bigger green bit than a red bit. That's basically it. So again, losing the 180k, One, I'm just giving back profits because there's been more profits than losers. And it's just OPEX. So you shouldn't really get hung up over it. And here's the other thing, and the reason I'm saying this is that I actually jumped into the Wonderland general thread Discord last night. I've never participated in before, and I think it's actually quite toxic. The technical analysis thread is where I normally hang out. People just seem cool there and chilled. But yeah, it seems like there's a bunch of trolls in the general. But one of the things I was trying to find, so yeah, someone was where is it? Just to give you some context. Yeah, so someone said, blah, blah, blah. The point of this protocol is to 3-3, hodl, let the masterminds do their work and stop manipulating the price and trying to time the market, I think. And so I'm just going to highlight this basically. In fact, I took a screenshot. Yeah, here we go. So, and this is, I really do mean this. So no, the point of being in crypto is for personal monetary sovereignty, where no one controls your money or tells you how to play with it. The secondary reason to be in crypto is to make freaking profits. And you don't make profits by blindly following loosely formulated concepts, which rarely work in the real world. Everyone's always going on about 3-3. Well, this is called the prisoner's dilemma for a reason. It's not called the prisoner's solution. Because prisoner's dilemma doesn't actually work in the real world. It doesn't. And the thing is, the other thing which I need to stress is that 3-3ing is effectively a trading strategy. Okay, and with a trading strategy, you have to always deploy the correct weapon for the correct target. So, for example, if you have a system which is, let's say, a trend trading system, well, you can only deploy that trend trading system when the market's trending up or it's trending down. If you try and deploy a trend trading system in a ranging market, you're going to get whipsawed the hell out of, and you're going to lose a lot of money. So 3-3ing is a trending, well, it's only got one market condition that it can play in, and that is a bull market. So 3-3ing should only be done on bull markets only. If you 3-3 during a bear market, you're absolutely going to get slapped in the face by a big wet kipper. And sorry, I was going to say something else there, but then the PC police will probably go, "Rah." And so this is why you need to sidestep. So you absolutely do not sidestep in a rising market. You 3-3 in a rising market and sit tight, get those lovely rebases, and then in a falling market, you sidestep the shit out of it to increase your token holdings, protect your portfolio. And if the market then goes sideways, guess what? You 3-3, because then the rebases are going to work in your favor. You must not do 3-3 in a falling market. I cannot stress that enough. You have to use the correct weapon for the correct target. So anyway, that's my 2 cents. Hope you're well, and I can't think of anything else today. See you later. Bye.